Okay. All right, welcome everybody. We're here a couple minutes early as we prepare to get going. Glad to have everybody joining us. Been doing a lot of research, making sure that we're getting this right for you. We're going to go ahead and go through my presentation, and if there's a Q&A section there, you can go ahead and pose questions to Brittany, and she's going to organize them. She's going to try to make sure that we're not going backwards. A lot of people will join this a little bit later. They won't join right on time. So instead of going back and answering questions for people that are just joining, Brittany's going to kind of decide if the question's already been answered or not in there, and we'll keep going through. So we really want to encourage your questions. I'm going to go through. Hopefully I can answer a lot of them. There will be some things that I go through that will make this, assuming that you have some understanding of the PPP already. So our previous webinars that we've recorded explain the PPP in detail, the Payment Protection Program, and you can get educated. So this is, we're going to be just talking about the changes in it, how they affect you, and what you need to be doing to make sure that you get full forgiveness on this. We want this full forgiveness is really a goal that we want to make sure happens for everybody. Brittany, can you hear me?
Yes, I can.
All right, good. Thank you.
And then just so everyone's aware, you can access those past webinars on our YouTube channel at Restaurant Systems Pro.
Thank you. And Brittany, jump in anytime if I miss something, forget something, if somebody's asking a question, or if I misunderstand the question, just make sure you jump in and make sure that we're serving everybody well and getting them the maximum benefit.
Okay, awesome.
I'm going to give a few more minutes to let people continue to join. This will be recorded, so if you can't stay for the whole time, I know that hopefully your restaurant's operating and you're serving guests and getting ready for service depending on which time zone you're in. So definitely we will be recording this and posting it.
Hi, Chef Michael.
Yeah, if anybody else wants to go in the chat, tell us where you're at, tell us your name and city, right here in Peoria. Welcome, Chef Michael. Love to hear from where everybody else is. Just go in the chat, put your name, your city, your restaurant. We'd love to know that you're on here.
We have Randy here from San Diego, Bernie from Anchorage, Alaska, Peter from NYC, Christine from Irvine, California, Cindy from West Virginia, Dean from Firebrew, a bunch of them coming in.
Damien
Awesome
from San Diego, Lee, hey Lee, how you doing? Charlotte from Augusta, Angela from St. Louis, Sheila from Salem, Tiffany from Surprise. I live in Surprise, Arizona. Hey Tom, how you doing? Charles from Restaurant Keepers. You want to give a shout out to any more people? Some more people that are coming in. I know there's lots coming in. Everybody
Yeah,
check out the
Brunella
chat, see
from
where everybody's
Grand
coming.
Junction.
Cool.
We're happy to help you, Tom.
Awesome. Thanks for sending those questions in before, Tom. Really appreciate it. All right, we're going to go ahead and get started. I'm going to be going through and showing, and one of the things I'm going to be doing is sending out an email following this that has, we sent out an email this morning to everybody, and if you haven't got it, please email us and request it. But the spreadsheet for filling in and getting your PPP forgiveness tracked properly so that you know that you're on track for the full forgiveness. So one of the first changes that they made is the Paycheck Protection Program. They as it started off with the maturity, it was originally a 2-year loan. Right. So at the end of it, it was going to be a 2-year. And what it did is it left it could have been up to 10 years, but they left it up to the SBA to decide the maturity of the loan. And the SBA decided that the loan would be payable within 2 years. So one of the changes that they made was the maximum maturity is still 10 years, but the minimum maturity of your loan is now 5 years. So it's going to move it up from the 2 years that the SBA put in place and make it to where it's going to be a 5-year maturity on that loan. And so those payments will amortize over 5 years to make sure that you have more time to get whatever is not forgiven in your PPP money spread out a little bit more to make it easier to pay it back. And it's still going to be at that 1%. So that's one of the big changes here is moving the maturity from 2 years, that was an SBA standard, up to a minimum of 5 years. And even your lender actually can have the ability to extend it out even further on that. All right, so then we have the amended coverage period. Okay, and so up above is what the amended portion says. The original CARE Act is below, and the covered term is beginning February 15th and ending this. Now it's changed from June 30th to December 31st. Okay, so so as those you're eligible to receive that loan, and now you could even receive it further on down. Now what's going to happen though is it's still June 30th to apply. Right, so it was originally in the bill to extend even the application date out, but the covered period is until December 31st, and that's actually that December 31st is going to affect the safe harbor rules in there. So in the original CARES Act, an update was that you had 8 weeks to for coverage of the loan, and during this 8-week time frame, the expenses that you had could be the rent expense, the utilities expense, all those expenses. From there, they could have been they had to happen within 8 weeks. Well, what happened was businesses weren't open. Lots of and bringing employees back was difficult. Sales weren't even as much, and so a lot, especially in the restaurant industry, the businesses were having a hard time using it. So what they did is they extended that from an 8-week period to a 24-week period. And what I'm hoping is that 24-week period is going to be a lot easier to use, because your PPP was based off of 2.5 months of payroll. Okay. But now if we have 2.5 months of payroll that we essentially need to use over 6 months, that's where using it hopefully is going to be a piece of cake to use all that up and get 100% forgiveness a lot easier in there. Now it's going to be 24 weeks from the date of your loan origination or December 31st, 2020, whichever comes first. So you'd have to get funded actually pretty late for December 31st to get hit. as the end of the period in there too. So a big change came from how you could use the safe harbor and how you could decrease your loan based on FTE requirements. Okay, so there's a couple changes that came out in the original PPP forgiveness paperwork that changed that FTE requirement from 30 to 40 hours. But then there was also another caveat that said if you had originally used 30 hours per week to calculate, that you could then switch, that you could actually keep it at the 30 hours if you calculated your PPP loan based on that. And then, but you could also choose to use the 40-hour per week as your basis for FTEs. And so that's a really important aspect of this. So borrowers who receive loans before June 5th may elect to continue to use their 8-week covered periods under the original CARES Act provision. So if you were funded before June 5th, you could elect to still do the 8 weeks. If it works so where you can get it forgiven in there and you want to do that, you can still do that. You still have the choice if you want to go to the 24 week too. So it's 168 days or 24 weeks after the loan origination date. The SBA's interim rules permit borrowers who pay employees on a biweekly or more frequent basis to use an 8-week alternative. Okay, so that allows you to still stick with that 8-week and opt to choose the 24. So I think you'd probably want to use the 24 because then it would even push back when your payments would start. And so using the 24-week, even if you've used it up early in the process, you can still choose that 24-week period to apply. And you have 10 months to apply for forgiveness in there. If you don't apply within the 10 months, that will automatically trigger. And I'm going to show you in the spreadsheet that I've modified for y'all and emailed out to everybody this morning on our list. If you haven't received it, contact us. You can contact me, Fred at restaurantsystemspro.net, and we can get you this spreadsheet so that you can use it for your forgiveness. Okay. All right. So a big change. You got a question?
Yes. So we have a bunch of questions right now. Okay. Sheila said, if you choose to continue with the 8-week period instead of 24, have you seen any guidance that you can still use a 630 covered period for the FTE instead of using 1231?
So no, so if you choose the 8-week period, your FTE would be based on your 8-week period. So your FTE calculation is based on the previous usage. The safe harbor rule though is still going to be December 31st. So even in your 8-week period, the June 30th safe harbor rule. So I'm going to go through all these because I actually would have covered that a little bit. So then we'll go back and ask the questions at the end after I go through it because I'm going to be going in circles, going back and forth. Okay.
Okay.
Because I'm going to get to the safe harbor rule because that changes at the end of where we're at. So it changes at the safe harbor rule changes based on where, and then there's a couple more caveats to that safe harbor rule. Okay. So the change of that the ending period from June 30th to December 31st is really important. So with that, we want to know that we have these FTE calculations that are going to go along either through the 24-week or the 8-week period, whatever you have. And if you bring everybody back and you have your FTE calculation there, you're good to go. That's fine. And my spreadsheet will actually calculate your FTE averages and help you make sure that you're on track for that. The other parts of this, let's see, is the exemption to that safe harbor rule. Okay, and what it's saying is, if you can document an inability to rehire individuals who are employees of the edge that were on your payroll as of February 15th, if you can document that, which is all you need is to say that they haven't come back. And one of the rules in that is if they say they can't come back, you can actually count that in your PPP forgiveness. Okay. Now with the 24-week time frame, you may not even have to do that. I would just document and make sure that I have that, especially when it comes to the safe harbor, as far as counting it as a full-time equivalent. So the money might not matter when it comes to counting these FTEs, but your number of FTEs could matter, okay? Now, if you could also demonstrate that you have the inability to hire similarly qualified employees for your unfilled positions. So if you can show that you're not able to rehire back the same quality of person, like don't make a rehire just because you need to replace somebody. You need to be, if you can show that you can hire somebody back at the equivalent skill level, then you can document that and have that count as one of your FTEs towards your safe harbor rule. Then the last one here is if you can document that your business levels, and I don't wish this on anybody, but that you can document that your business levels have not come back to full capacity, right? So if you're at half the sales, 3/4 of sales, even if you're 10% down, you're at 90% of your sales. If you can show the slowdown in business, then they'll allow you to have the slowdown in FTEs. Now, what that means, they haven't said like if it's, if you're 10% down, can I have 10% FTEs? That would kind of make sense. It doesn't make complete sense because that's not how efficiencies work, especially in a restaurant. But they're definitely saying if you can show a decline in business, then you can have a decline in FTEs and not have to bring everybody back and still get your full forgiveness on that. Okay. So the ratios. So in the original document, the ratios were that you had to use 75% of the PPP on payroll, okay, and health insurance and state and local taxes, payroll taxes and unemployment insurance, state unemployment, all of that counts towards payroll. If vacation pay, that counts towards payroll. Severance counts towards payroll. Your health insurance benefits, 401k, any contributions like that count towards payroll. And so all of that is considered payroll, and you need to use a minimum of 60% now. And then you can use up to 40% on things like your rent, your utilities, those other expenses that are covered in here. Interest on your mortgage, so any interest on real property. So it has to be a mortgage, not just a loan. There has to be real estate involved, and then the interest on that is forgivable. Okay. So those and so those safe harbor rules, it actually lines it up. So even if you're not at your FTEs and you're not that average all the way through, if you can show the decline in business, which a lot of times you can, especially if you were to take my business and I was closed for 3 or 4 months, or let's call it 3 months, it's going to be tough to get all those sales back. And so I would show a definite decline. Even if you come back to normal business levels, by the time you open back up, you're just going to still show that you were closed. And so your total sales through that time frame are down. And so having those FTEs back, and all you got to do is show that your sales are down year over year. Okay. And so that's going to be a definite plus in making sure that you're able to show your the forgiveness in there. Okay, so the 75-21 rule. So this is where you can show that you can still choose to keep the 8-week period if you prefer to keep that, and it may be easier just for paperwork and whatnot to do to keep that going. Okay. All right. So the new deferral. So now, if let's say you don't get it all forgiven, so for whatever reason you end up using different parts of it on different times, the date, instead of 6 months from origination, it's 10 months from the last day of the covered period is when that deferral period would go. You can apply for forgiveness and have all the payments start earlier than that, but it ends up being 0% money. So I don't see any reason right now not, and if we find anything about this, but I don't see any reason why you wouldn't at least, if you wanted to get that loan paid off sooner, to at least keep the principal, earn some interest on it, keep it separate. If you're not good at managing money, get it paid off right away so you don't have to have any trouble with that as well. But it's 0% money until you start paying, and then it turns into 1% interest on that. And so definitely do that. And if you don't use the money for PPP purposes, rather than have payments, just pay the principal back, and so you're not dealing with payments on that. Okay. So Here is, and I'm going to send this slideshow. We're gonna create a PDF of this, and we're going to send this off. Okay, and this is a statement from the IRS with a changing the deferral here. So changing the the part of the CARES Act that allowed you to defer your payroll taxes. And in the CARES Act, what it said is that if you had if you wanted to, you could, under the CARES Act, defer your payroll taxes this year, okay, have 50% of them. So if I would defer from now, if you've already paid your payroll taxes, you don't get a refund on them or anything like that. Okay, if your payroll company has them, if you've paid them to your payroll company, you can't just go back and ask for a credit. But from now until December 31st, you can have your employer share of Social Security tax. Which is going to be a significant amount of money, especially because in the restaurant industry, we pay taxes on tips that we don't pay out. And so we have actually a larger share of employer tax in a normal business. But from now until the end of the year, you don't have to pay them. And then on December 31st of 2021, 50% of that deferred amount is due. On December 31st of 2022, the remaining 50% is due. Right. And so that's essentially 0% money. I'm going to say right now, though, that, do it through your payroll company. They're going to keep you on track with knowing what you're due. I would still recommend setting the money aside. If you end up needing to use it for working capital, at least you'll know where it's at. Because one thing about payroll tax money, you cannot go bankrupt on it. If you go, there's nothing you can do to protect you. You will have penalties and interest, and owing 941 money is some of the most expensive, damaging money that you can owe. So even though you have this, I want to, just kind of put that word of caution out there that says to be very, very careful with this money and making sure that we're setting it aside. And if you're needing it for a little bit of working capital, but you do have this option. It is a little bit dangerous option though, but the option is there if the need. And this is where you got to have good cash flow. You got to have good making sure that you know that those monies are there, because all of a sudden you're going to have it could be a 30,000 to 100,000 to depending on how big your payroll is. It could be a large amount in there. Okay, so the spreadsheet was sent this morning. Okay, and let me make this a little bit bigger for everybody. So I have a new criteria in here. Okay, so if one of the things that the spreadsheet's going to do is it has this is the bi-weekly one that I have set up, and this is telling me, hey, if I got $80,000 of PPP money, okay, and it was distributed on 4/28, then I would need to have at least every payroll. I would have to have at least $4,000 on that payroll for me to get it fully forgiven, because we've taken it out over the 24 weeks instead of the 8 weeks. Okay, so it's much less. The number is much less. The interest rate is 1%, and that is now at 60 months on the payback. So we'll calculate your numbers here. So now we have this built out to where it's 24 weeks of payroll that you can add to it. So you can keep tracking it. You can just input here any yellow part of the spreadsheet. It will tell you, and it's even explaining here what is part of that: gross salaries, commissions, vacation pay, anything less than 100K, cash tips. So this is the thing too. Tips are claimable on that, because tips, when you got your PPP money, okay, even though that wasn't payroll that you paid out, those tips were used in your calculation. Okay, so the cash tips or equivalents are part of a forgiveness, so you want to claim them, and it's also a good reason for your employees to be claiming their tips on that. So state and local tax, retirement stuff, healthcare benefits. Okay, and you can track them all in here from the date too. So the end date here, this is where we're at. But what it tells me is that based on this is 24 weeks later from 4/28. It'll do it automatically if I change that. Okay, so if I was to change this to 4/29, okay? Then it's showing my end date will move from the 13th to the 14th, and then it will show that my payments will start so at the end of the 24 weeks is when my 10-month clock starts for forgiveness. And then anywhere in between, I can do that. If I wait the full 10 months, the furthest I can go out will be 8/14 of 2021 for my first payment. Okay, so you'll go in here. We changed the tracking for FTEs for you to be able to go in every single week, track how many full-time. So if I go over, now here's what you can do is you have this choice. If you calculated based on 30 hours when doing your original calculations, you could use the 30. If you want to use the 40, you can. And all you do here is you change it, say, hey, I'm going to be basing it off 30. Or I'm going to be basing it off 40, and you can see which way works better for you. Actually, whichever one is going to work better for you. You just have to be consistent the way you do it. If my basis for pre-closing is based off 40, then I have to calculate on 40. If my basis was already done based on 30, then I have to go forward using 30. So it can be confusing because a lot of paperwork thinks that you have to go 40, but there's a provision in there that says you can, if you'd already started doing it at 30, you can continue to using it based on the 30 hours per week in there. Okay, so this you can go through. I've already shown this in other webinars. I've just extended it all out to the 24 weeks, and then we have our other covered expenses that you can go. And now these are up to 40%, and it's showing you how much money you could put in here to spend. And all the yellow parts are the parts you can edit of the spreadsheet to make sure that you're using it correctly. Okay. So now, Brittany, I know there's probably a lot of questions. Let's start our Q&A and getting through and clarifications on things I've covered and questions that people have. What do you got?
Okay, so I actually don't have that many questions now. So Scott Champ asks, what about employers' practice liability insurance? Can that cost be forgiven?
No, that insurance is not covered. Workers' comp's not even covered. Unless you're a state where workers' comp is a tax that you pay. So if it becomes a state payroll tax, there's only a few states though that have workers' comp as a state tax. Most states it's a separate insurance policy on there. The thing is though, with the 24 weeks, you should be able to use it mostly on payroll. And that's the thing is it doesn't have to be that you use 60% on payroll. You could use 100% on payroll. Okay. And what that will essentially do is free up monies for these other things like the EPLI insurance and everything.
Awesome. And then the next question is, I just want to make sure I received my loan on 5/18/20. Is this change retroactive?
So if you received on 5/18, the change, you have a choice where you can use the 24-week period, and I would choose the 24-week period. If you're able to, because you're before June 5th, is what it says, is that you can, if you're before June 5th, you can choose. And so what was the date?
5/18/20.
5/18. Okay, so you put that date in. That makes your end period November 2nd, and your first payment would be the 2nd of September 2021 is what that would look at, because your clock would be 10 months after. But yeah, 5/28, you can choose to use the 24-week period. It does go backwards, right? So what's tough is a lot of people end up using extra of their PPP money because they're trying to get it forgiven in the 8 weeks, and then they go ahead and change it, and that money's already gone. So, you know, if that's you, I'm really sorry about that.
All right. Lee asked, can the cost of a headhunter be applied to PPP loans?
Only if they're on your payroll. So if they're on your payroll and they become a W-2 employee, otherwise, no.
What is the owner cap? I also just saw something from CAR that I may not be able to add myself into payroll if I was not on the payroll prior to the loan.
So that's a CPA question. There's certain ways, and it depends on how your whole company's set up and what your business entity is, that you may be able to add yourself after the fact. Hopefully the 24-week period will change that you can easily use up all of your PPP money with your regular employees, and that would just free up other money to pay yourself on that. If you're on payroll beforehand, though, you can easily use it to add yourself, because it's already showing that your business entity, that you could be on payroll. So it depends on how your business entity is set up, and that'd be a CPA question. So I'm sorry,
Awesome.
I'm not perfectly clear on that.
And then Peter C says, so we have the option of using 30 hours as one FTE before COVID-19 to calculate and apply for forgiveness as well, correct?
Yeah, so if you use it when you're applying and that's your pre-pandemic calculations on 30, then you can use 30 after. They did put that provision in there because they changed it. The SBA's guidelines have always been since 2014. So not always, but since 2014, it's been an FTE is 30 hours per week. Even when you look at the Affordable Care Act, Health Care Act, that that was even based on 30 hours. So every single thing told us it was based on 30 hours. And then they come out with a revision and they said 40 hours. And so then they went back and said, okay, if you're based on 30 before, then you can base it on 30 after. And the spreadsheet I give you here, you can change it to what you're using, and you just put 30 or 40 here and it will change it.
Awesome. Kristen Lee, she said, we have several part-time employees resign. Supposedly the resign can be counted in my FTE.
Yes.
But if they did not work, what hours do I calculate into the FTE?
Yeah, whatever hours they were working before 215. So in that time frame before 215, what were they normally working under normal circumstances? That's what you would count them as. So if they were averaging 20 hours a week before February 15th, then you would be able to use 20 hours per week. And then you see the document and have all that stuff ready to go. The key is your safe harbor is going to be the best thing. If you can get back up to pre-pandemic levels by December 31st, then all of that doesn't matter. All the tracking of FTEs is thrown out the window, and that's a safe harbor rule. So if I'm up to pre-pandemic by December 31st, then I'm good to go. Then also with that, if I can show that I have a decline in business, which if you've been closed and I look at my business throughout the year, you're going to be down. And so you can show a reduction in FTEs that way as well. You're still going to need to count and track them though. And so I would do it as you go in the spreadsheet. And then, you could even, and then just save the documentation and payroll numbers to go with it. And what you do is anybody that's over 30 over your 30 or 40 hours, based on whatever you're using for calculation, you just automatically enter the whole number in here. This actually doesn't even really matter. It's just how many employees you have that are part-time. But then you put in all the hours of your non-full-timers here, and it will calculate FTEs over here for you, and then give you an average.
Awesome. And then Bernie, are all PPP loans now at a 5-year payback?
Yes, that's the minimum. Your lender may extend it out, but that's up to your lender. But the minimum is 5 years now.
If I stay with my 8-week period, can I still use 12/31/20 for safe harbor, or do I need to use 6/30/20?
You can still use 12/31 as your safe harbor. Yep.
To verify the safe harbor back to pre-COVID headcounts, wouldn't I still need to use 30 to 40 hours to calculate headcount as if it was back to pre-COVID?
Yes, you do have to have and so you start off here by putting your pre-COVID headcount here, right here, right? And so you have two criteria you can use. There's two choices, and there's a drop down here. You can base it off of February 15th, 2019 to 6/30/2019, or the 1st of January of this year to the end of February this year. Those are the two basis date ranges. The basis date range doesn't change, but December 31st is where you're at. December 31st will be compared to either of these numbers that you choose.
Awesome. And then one more question so far. Scott asked, originally it was stated that any unused funds have to be returned by 7/1/2020. Is that still the case, just using the 24-week period instead?
Yeah, I mean, so if it converts into a loan and you pay back the principal, you still don't have a problem. So if you don't use it, it was just if you don't have to apply for forgiveness and do all that stuff. So like even if you wait, I mean, think about it. Even if you don't give it back and just kind of wipe the slate clean, you're okay, because you can still do an EIDL and have a PPP. You can get both, right? And so the only The only one before was that they put that where you can forgive it is if you didn't deserve it. It was kind of like the Ruth Chris that had all the shareholders and all these big publicly traded companies. That rule was for those companies that shouldn't have received it to give it back without penalty. Now, what they did say though is they're not going to ask any questions on any PPP loan under 2 million, right? And so most of us here are small businesses, So if if your PPP was over 2 million, then that's where you have to really really follow that. Otherwise, if you have the money, a loan becomes due and you pay back all the principal, you're good to go.
Awesome. So Dennis wanted to let us know if you got your loan prior to 6/5/2020, your loan is not automatically converted to a 5-year loan. You must contact your lender for a 5-year agreement. Only loans received after 6/5 are automatically a 5-year loan.
Yeah. So if you're back there, you have to go and talk to it, but you can get it, and your lender has to agree to it. They have to agree to it. It says in the Flexibility Act that it's a minimum of 5 years now. So they'll have to change the paperwork. And if you haven't applied for forgiveness yet, then it should just automatically go to 5 years.
Awesome. And then Sheila asked if we could go back to her original question.
Okay.
So Sheila asked earlier today, if you choose to continue with the 8 weeks instead of 24, have you seen any guidance that you can use that 6/30 covered period for FTE instead of using 12/31?
I haven't, and I don't think that that's there because in all of the paperwork it says strike out. Basically, the way they read it is strike out and change the safe harbor June 30th to I think the only thing it said is that you can change from the 8 week to 6 week. The safe harbor is all December 31st in there. But here's what you can do is if you are showing the proper amount of FTEs for that 8 week period, then you don't need the safe harbor, right? So if you've gotten your FTEs up to where they're supposed to be over that 8 week period, then that safe harbor rule, you don't need it. You just get 100% forgiven based on having your FTEs up to match. That's been hard for people. It depends on your concept and what's going on with your sales.
What she should do with salaried employees specifically when they're not a full-time employee.
So salaried employees are considered full-time employees. So they're not clocking in or out. So if they're salaried, they're considered full-time. You just can't cut their salary more than 25%, right? So if you're paying them less because they're working less, if you're still paying them 75% of what they were making before, they're still considered a full-time employee on salary.
And Sheila said our owner is going to be part-time and therefore our employees are as well starting on August. So we won't meet the FTE in 12/31 or their salary.
You won't need, can you say that again?
Yep. So our owner is going to be part-time and therefore everyone as well as all of our employees as well starting on in August. We won't meet the FTE on 12/31 or their salary.
You won't need them. So what you need to do is just show the reduction in your sales that will change that. So it's like whatever, if you're closed all the way up until August, you can easily show that you can't come up to pre-COVID FTE levels. Hopefully, does that answer the question?
Yep. So someone else said, so to be sure, FTE should be up to normal by December 30th. Nothing.
Yes, December 31st.
Yeah. Okay. Perfect. Another question.
Now, if your sales are down and you're not back up to pre-COVID levels, then there's a provision in there to that you just have to document that you're down. And then any employees that don't come back, or they can also be counted as FTEs. You just have to have it come back that they're not in writing that they're not coming back.
Awesome. Tiffany asked, I received the EIDG, not EIDL, deposited into my account after receiving my PPP. Does that amount need to go into my PPP loan forgiveness under EIDL?
Yes. Yeah. So this is the advance. So it's the Economic Injury Disaster Grant. So what that means is that you were denied your loan, but you still got the grant money, but you still got the $10,000. Or is your loan still being processed? Has she been denied? It depends on if she's been denied or not for it to really be a grant.
All right.
I'm assuming she called it a grant. So. But yeah, so you just put the 10,000 here and it changes your spreadsheet there on what would be paid back.
Also, Tiffany wants to know, would it be possible for you to go over line 5 to line 7 on the PPP forgiveness form?
So the PPP forgiveness form is now out of date. It's going to be changed. So, you know, I can go back and cover that, but they've said, the SBA said that they're redoing the form now based on this. So, you know, it's not really worth going over right now because they're changing it. And I'm happy to, and so when that comes time, just feel free to reach out. Like, you don't have to be our client for us to help. We help people. That's what we do. Is Tiffany our client?
Tiffany, are you one of our clients? I don't recognize her name.
It doesn't matter. Either, I just want to make sure that I'm acknowledging everybody. Tiffany will help you, client or not. And anybody out there. Yeah.
And then Sheila, going back to her original question, she said, no, that didn't quite answer right. Our FTE or our salaries won't be up to pre-COVID because of other reasons. Sales won't be down. That's the issue.
Yeah, so what that means is, okay, so here's how that looks for you then. If you can't get them up, it's other reasons. All right, let me take a couple of full-time people out here, right? So this is what will happen to your loan. So if you don't have your FTE, so I'm just in this example here, I'm just reducing FTEs, right? So I'm going to reduce it until we get down to 4 out of 5, right? So here's what will happen. Okay, so now their pre-COVID FTEs were 5. Okay, now they go through and they count them. Now my post-COVID FTEs are 4. Okay, so when I go back to look and see what's going to happen to my loan down here, it means that because I'm 4 out of 5, 80% of my loan will be forgiven, is up for forgiveness, not 100%. Okay, so it's that ratio of post FTEs to new. So if you're not able to bring it up and it's not because of sales and it's not because people are refusing to come back, then it's just going to be a ratio, and you'll have, if 4 out of 5 come back, then it'll be 80%, and you just fill in the spreadsheet and it'll tell you what that amount is.
Next question is from Anonymous. Can you please explain the qualifiers in the FTE safe harbor regarding the decline in business due to COVID? Part B of that paragraph describes requirements due to reduced
let's go right to the bill. Okay, so okay, so so you're saying, so here's where it says, let's see. Oh, actually don't have it up on here. Let me bring it up. Okay. Sorry, this is all very fun. All right, here we go. Deferral period. All right, go ahead and repeat the question as I'm looking this up.
Okay. Part B of the paragraph describes requirements due to reduce of the social distancing that must be met in order to qualify for the decline in business portion of the safe harbor for the FTD.
Right. So what this, so what this is saying is if the restrictions that have been placed on businesses because of COVID have reduced your sales, then you could be eligible for a safe harbor due to a reduction in business, right? It's due right here, due to compliance with requirements established by the Secretary of Health and Human Services, right? So if your sales are down and you have the inability to return to the same level of business activities due to compliance with requirements established. So if it's because of COVID that you're down and slow, then you have a basis. Now they haven't said exactly, if I'm 50% down, does that mean I have a 50% reduction? That hasn't been laid out, and so that should come out in the forgiveness paperwork of what that looks like. But if your business is down, you're not going to be required to bring your full FTEs back up.
All right. The next question is going to be Mark Katz. He's asking, if I stay on 8-week period for payroll and I have extra funds left over within 40% for others, can that use that funds to pay rent and utilities after the 8-week period?
No, you have to choose the 8 or 24. Just choose the 24. Yeah. Yeah, it has to be in that
All
8-week
right.
period. Yeah.
Any
So if
other
you,
questions? Sorry, go ahead.
oh, go ahead. Sorry.
No, no more questions. I'm just making
Well,
sure.
somebody raised the hand. Person. Okay, this spreadsheet is being sent to everybody. We're going to send out the slides that have the links and things to this. I'm going to send out links to the bill so you can kind of see where I'm getting my information. We got it right from the source. Hopefully we've been clear, and I just want you to all feel very comfortable to reach out, and we'll get your answers, questions answered. We'll get your answers questioned.
Scott, yes. You just have to reach out to your lender about switching it to a 24-week period.
Yeah.
Herson, the good phone number you should call is going to be, you can call 623-266-9611, and you can ask for Fred or I. Another question, this is going to be from Linda Johnson. Hey, Linda.
Hey,
what
Linda.
if my restaurant has decreased sales, but the market does not? Less employees in the market.
Do you have is the market and the restaurant two separate legal business entities?
No.
Then so you just need so you're saying you're needing less employees overall. So yeah, that won't yeah, because all they're looking at is they're not looking at what kind of business, they're looking at that business entity's sales, right? So sales in the restaurant now, markets up, you're just using it differently, you're more efficient. It'll just be, you'll just have a reduction FTEs, which doesn't mean the full amount is not going to be forgiven, but if you're 4 out of 5, then you'll get 80% forgiven. What I would do though is if you had people not coming back, if anybody refused to come back, use those as FTEs. So they don't have to come back. If they refuse to come back to work, then that's a way to increase your FTEs without having extra employees.
And Fred, you have the most updated PPP forgiveness loan form, right?
There isn't an updated one. As soon as they come out with this, they haven't released a new one yet based on the Flexibility Act. So the other one has become outdated.
All right. And then Lindsay said, no, she said, I think we will be okay because kitchen's up due to DoorDash.
Okay. Yeah, so here's the thing. Just use this tracker to track every single week from the beginning. Do it as you go. It'll be a lot easier than waiting towards the end to do it. You'll see how you're trending and what you have to do. You have 24 weeks to fix the trend if you can. And if you can't, then you'll at least know what's doable. Now, remember, you only have to get up to 60% on the forgiveness. But if I can't get there in my 24 weeks, then I'm going to try to get there by the December 31st. So even if I'm not there the whole way through, let's say I had 5 FTEs last year and the whole way through I've had 2 FTEs all for 24 weeks. If by December 31st I get up to 5 FTEs for that payroll period there, then I have my safe harbor rules met. So I could have 2 time out of 5 and get back up by December 31st.
And then Anonymous is asking, is it too late to apply for EIDL loan to get it forgiven too, and it needs to be paid back?
No, so on the EIDL, what's the actual date? I think it's both June 30th on both of them. So for sure the PPP is June 30th as your deadline, but the EIDL loan is still open till then as well. So you have this month to do it.
Sheila said, are they using the week of 12/31 or the pay period including 12/31?
They actually haven't explained that. It's just how many, I guess it'd be the pay period that happens on 12/31 would be that's my interpretation of it. Not that you just had that many people working that day, but the payroll that happened, that includes whatever pay period that has 12/31 in it, that would be the one. That would be the one that makes sense, because you'd have to use your payroll records to prove it, not just a export from your POS timekeeping system.
Sheila said, thank you. The pay period differs for everyone from weekly to bi-weekly to semi-monthly. So how are they calculating that?
Okay, so that's something that we can help you with. It shouldn't be an issue. So there are some things that will, that it's a little bit complicated. So what can happen is, if you have a biweekly, but let's say my date is April 28th, okay? But then I have a pay period that begins on 5/1, okay? I could choose to start my 8 weeks on 5/1. Okay, so then it hits, so that my biweekly pay will stay perfectly within that 8 weeks. Okay, or let's say I have my first pay period happens on 5/5. Okay, even when I was funded on 4/28, because my payday hits on 5/5, I could choose that date. So you got to choose which way. You can't just do both. And it's really kind of a cash accounting versus accrual accounting. And so in the paperwork for PPP Forgiveness, it walks you through choosing these dates. I don't think that they'll actually come up, because now if I have 24 weeks to use 2.5 months of payroll, I shouldn't have to worry about where those pay dates find. I could make it sure that that all fits within that 24 weeks. If you're in a position where it's taking you 24 weeks to use up 2 months of payroll, and it's not clear on if I had any pay period outside of those, just reach out to us. We'll help you fill out your paperwork. Okay, it should be, though, with the 24 week, though, that you could actually go out a couple, that you shouldn't have to worry about if it's overlapping. It was a really important issue when I had to use 2 months of payroll within 8 weeks. That was a huge issue on where those dates fell. But now that I'm trying to use 2 months of payroll within 6 months, it shouldn't really be that much of an issue. Hopefully that made sense.
Michael Brown asked, I'm on the SBA website, and they are saying that agricultural businesses are now eligible for EIDL. Can you please speak on that?
That what businesses?
Agricultural.
Okay. So agricultural businesses have been. I didn't. It wasn't my knowledge that they weren't eligible the whole time. It's not new. I'm not understanding the question.
And then Michael just said, but restaurants are not.
They're not? Okay. So that time, it could be that the money fell out and then they added more money for agricultural businesses. Yeah, you really,
someone else,
everybody started applying for that on March 24th on there is when it happens. And a lot of people have been funded on that. Okay.
And then Peter just said SBA is currently only open to agricultural businesses.
Okay.
Tiffany asked, we did end up getting our SBA loan offer after receiving the EIDG, but did not accept it, and we will not accept that money. So to confirm, is the EIDG a grant or a loan?
So if you got the $10,000 and then you don't get the loan, the SBA has to deny you for the loan. Okay. So if you get denied, then that $10,000 becomes a grant. If you got the $10,000, okay. If you can't just refuse the loan and then not, that $10,000 will then go into a loan. If you decide to not move forward with a loan and you've been approved.
Is it possible to have EIDL forgiven or converted into a grant? SBA currently only.
So the EIDL can only be a grant. It'll only be that $10,000, and it's only if you got denied. It's only if you got the $10,000 and then were denied the EIDL. Then it becomes a grant. Otherwise, it's a loan.
Does EIDL get forgiven under a certain amount, or EIDL needs to be paid back?
No, EIDL has to be paid back. Yeah. Yep.
If our 24 weeks end in mid-October and we are not back to 100% STE and we only have 60 days to apply for forgiveness, which puts us in mid-December.
You have 10 months though. You have 10 months to apply for forgiveness now. from the end.
Well,
And if you don't apply within that 10 months, it will automatically go to this. That's what this date is if you don't apply this date. So like using this example of 5/18 as the fund date here, then the period would end 11/2, and then automatic payments would start 9/2 if you don't apply for the forgiveness. So I put that first payment is the furthest out you could possibly go with payment starting, but you have 10 months to apply for forgiveness now.
Lee asked the question, when will the forgiveness paperwork come out? Lee, we're unsure when the forgiveness paperwork will come out. They haven't come out with a date yet.
I don't imagine it will take that long because they've already just an edit. It's likely just they have to edit the original paperwork and clear up some of these things. I'd imagine in the next few weeks, but with it being extended 24 weeks out, they have time, to come up with it. And this spreadsheet is going to follow a lot of that anyway. So it'll make doing the spreadsheet will make when it comes time to fill out that paperwork super easy.
Awesome. And then Kristen just wants to clarify a question. If we use all of our PPP by week 10, we can go ahead and apply for forgiveness early, right?
Yes. I'm not sure, I have to do it. I mean, there'd just be, yeah. So if you're, especially if you're looking at, the only reason not to is if you're not looking at 100% forgiveness. But yeah, apply for forgiveness early, get all the paperwork done, get that out of the way, get it all taken care of. Yes.
Any further questions? We have another one. Okay. Haley says 40% of the 40% of the PPP can be used for rent utilities. Is paying the suppliers, vendors for a restaurant bar part of what we can use for the 40%?
No, you cannot use it for those purposes. Mortgage insurance, rent, utilities, and there's other interests that you can do. Like it's the transportation's considered utilities, and that's where kind of the other interest comes in. If like the transportation on maybe business vehicles. But you're talking gas, electric, internet, and phone, not like garbage pickup or anything like that.
Yeah. Linda Johnson just wanted to give us a heads up that the California Restaurant Association said the new forgiveness will be available on Monday.
Okay.
So hopefully that's accurate.
Cool.
Person, just to confirm, our phone number is 623-266-9611. Any further questions? Oh, I just got a bunch more. Give me 1 second.
Okay. Mm-hmm.
When you receive the PPP, can you decide what week you want to start using it? For example, a month from now?
So no, you can only start, the only choice you have is if, like, let's say your first payroll is a few days from where you start. Otherwise, it's when you got funded or when your first payroll is. So you cannot choose your date to start. It's when you get funded. And the only flexibility is if you're having trouble making it fit, that you can start it on the payroll dates, your first payroll date.
Kristen wanted to say thank you. And then Brandon asked, what is the safe harbor method and how is it used in the PPP forgiveness process?
Okay, so the safe harbor is being back up to, so in this thing, we fill out what are our pre-pandemic FTE levels. If you can get back up to this level, so in this case, you have a choice of and maybe he's just joining now, but we have the 2 months, January and February, okay? And then, or we could choose our other criteria as February 15th to 6/30 as our periods. From of 2019. So the previous period, previous year, or the 2 months prior to the pandemic, which is January and February, is your basis FTE. Then by December 31st, if you can get back up to your pre-COVID FTE levels, then you can do this. Then you are hitting the safe harbor rules for 100% forgiveness.
So I'm going to repeat our phone number one more time since I have a bunch of people asking on chat still. It's 623-266-9611, and I put it on the comment section under the chat too. That way you can go ahead and save that. Also on our website, on any page of our website, if you scroll down to the very bottom, you'll have all of our contact information.
Restaurantsystemspro.net.
Any further questions?
You can email me, fred@restaurantsystemspro.net, Brittany, as in Britney Spears, at restaurantsystemspro.net. That's BRITNEY.
Scott, this recording will be sent out. It's going to be sent out just like how you received this Zoom meeting link this morning. Also, it's already up on our YouTube channel and it's saved on our YouTube. If you're a member of our community Facebook page, I've already posted this on our Facebook page as well. Also, one more time, the Excel spreadsheet that Fred has pulled up is in that original email sent this morning. Feel free to email me or Fred if you want it resent to you.
Yep.
You're welcome, Scott. Thank you.
Okay.
Any
well,
further questions?
Yeah.
Go ahead, sorry.
Oh, no, you're good. You're a wonderful moderator. Thank you. Did a great job.
Thanks, Linda. I appreciate you.
Okay, we appreciate you all so much. We want to be here for you. We want to serve you well. We want you to come out of this thriving. So, we also want to be here for your systems. We want to be here for your bookkeeping, your checklist, your labor management, your scheduling app, your checklist app, your inventory app. You name it, we want to be here. We want to connect to your POS system and have your PMix automatically and CEO's usage reports. We want to serve you on many levels, but however we can meet you where you're at to serve you well, we're going to do that. So thank you everybody for joining in the webinar today. And hopefully we provided you some great information. And we also want to be here for you when you're on your own. Don't feel like you're on your own filling all this stuff out. We have our number there. You can contact us. Let's see. Here we go. Oh, look at that. Also my cell phone, if you need to reach me directly, right there. Here to serve you well. It's all there for you. Reach out to us. You can even, if you're looking for a demo of our systems to see how we can really take your restaurant and help you to bring it to the next level, you can schedule an appointment with Greg as well. Any more questions?
No more questions, but I do suggest whoever's asking right now, we have a bunch of people asking for your email. Take a photo of this page right now. That way you have it and you can redirect to it.
Yep. All right.
I think we're good, Fred.
Okay. Thank you, everybody. Stay safe out there and make some great food.